And then on the vendor side of things, if you're recording everything with electronic transfers, which is more likely to be the case, oftentimes, especially for smaller businesses, you might be able to automate this. This is where the automation really typically shines, meaning especially bills that are routine, month-end bills like telephone, utilities, the rent. Those are things you can usually automate and record them with the bank feeds. But if you're putting things into accounts payable, typically for larger businesses who are trying to wait as late as they can to pay for something due to the time value of money, the size of the transaction, and number of transaction, making holding on to that money for an extra 15 days important, then you're going to have an accrual component in it again. You're going to be increasing the accounts payable. There's no bank transaction that will record that for you. So typically you're going to have to increase the accounts payable, then pay off the accounts payable, and then once again use the bank feeds to reconcile rather than record the transaction. You also have inventory. The problem with inventory is that normally you have to record it as an asset and not just expense it. So when you pay for the inventory, you have a problem that you have to put it on the books as an asset instead of just expensing it, which would be the easiest cash-based thing to do. And then when you sell the inventory, if you're using a full service perpetual system, you typically would need to use an invoice form or a sales receipt form to properly track the inventory within the accounting system, or you can work around that by using a periodic accounting system, tracking the inventory outside, as we talk about in a Shopify store or something like that, which we have a whole nother course or section on. So inventory will throw a wrench into the system